Hello everybody and welcome to the 87th edition of LM's Weekly Wrap, our weekly program for the market related developments, tracking the international as well as the domestic market developments. I think it would be a little early to call it the weekly wrap because we have a market session which is there slated for tomorrow also. So the markets will be open tomorrow, but I think keeping in account our tradition and practice of releasing our weekly wrap on Friday. I think we've continued that tradition, and hence we are bringing this edition to you at this point in time. As far as the markets were concerned, I think the domestic markets had a dream run in this particular week. We had a kind of a slow start to the markets. Markets were a bit anxious at one point of time about the prospects going forward. And there were a lot of market participants who were skeptical that markets have topped out at this point in time. But I think markets have eventually proven everyone wrong, at least as far as today's performance of the market is concerned. Starting off with the international markets, I think not much to really cover from the international markets. I think most of the international markets were quiet. Global cues were quiet. We saw some upward movement in the crude oil prices, but I think overall it was a quiet session as far as the global markets are concerned. But no dearth of action as far as the domestic markets were concerned, as I told you. And just to cover the broad market action, I think we saw some good pickup in IT sector stocks. I think the re-rating of TCS, Tata Consultancy Services, by a global brokerage firm has really set the tone as far as the IT sector is concerned. So I think we saw the brokerage upgrade and a target price of 4,700 for TCS, and that really set the ball rolling as far as Tata Consultancy Services is concerned. The second important development during the week was the announcement by Reliance relating to the tie-up with Disney. I think this also is a very important development as far as the media sector is concerned, and it's set to redefine the media sector in many ways as far as the company is concerned. And the third important development which has taken place today is the GDP numbers. So I think the GDP growth numbers, Q3 GDP growth of 8.4% is a very positive development which has been taken by the market. And another important point to note is that consumption has not kept pace with the growth in the tax collection. So I think this continues to be a cause of concern, and we have seen a reflection of that in various consumption-driven stocks, whether they are discretionary consumption or FMCG stocks, etc. This is exactly one of the reasons why the FMCG stocks too have been under tremendous pressure in the recent past and have underperformed. So this has been the broad crux of the market. Today the market's crossing 22,300 and given very strong support by Reliance Industries and ICICI Bank. And needless to say that this week's other stars were Tata Steel as well as Tata Consultancy Services. Today I think Tata Steel giving a very strong move. We have very good move happening in the metal stocks. Today we've seen very good auto numbers also. So I think that really has set the tone for the markets, and very strong contributions coming in from all quarters, helping the market to cross the 22,300 levels. So with this we start off with a sectoral roundup, starting off with auto and auto ancillaries. I think we've time and again said that auto continues to shine, and we've seen good performances from passenger vehicles as well as two-wheeler stocks. Commercial vehicles also performing quite well in the market, whereas tractors have been under some sort of pressure. But overall, I think really no reason to complain. Most of the auto stocks were up in the range of 2 to 3% in trade. Very impressive numbers coming in from the auto majors. And I think after this, we've seen, of course, the auto ancillary stocks also rally in trade. Our weekender stock idea, Jamna Auto, doing quite well in trade. It was one of the biggest gainers in trade today. It's moving towards a target of 143. Apart from this, we have a lot of auto ancillary stocks like Sona Comstar or the likes of Minda, Suprajit, etc., which have done quite well in the markets. Next, we come to the banking sector. I think we've kept our view that banking is private sector banking is likely to remain under pressure. But I think the best from this pack is ICICI Bank, and I think it's really performed quite well in the markets today. And I think PSU banks are looking more attractive on a relative basis. So we've seen good performances coming over there also. There we like State Bank of India, Canara Bank, Bank of Baroda, and Union Bank of India. The third category is the capital goods space. I think capital goods, ABB, Siemens, etc., performing quite well. But I think the emerging blue chips which have been identified by us in the capital goods space, stocks like Elecon Engineering, Action Construction Equipment, Triveni Turbine, and Schneider Electric. All these stocks have done exceptionally well in trade. You can refer to our notes and our projections with respect to these companies. I think in today's market, Action Construction Equipment was a very star performer, and they are into construction equipment and cranes in a very big way. They've given very aggressive guidance. They're doing a revenue of approximately 2200 crores. They have said that they are likely to double their revenues by FY26 to 4400 crores, and in FY27 to 5500 crores. So very aggressive guidance coming in over there. So the point I'm trying to make is that the smaller companies which have had a very strong share coming in from the power sector continue to shine in trade, and we're seeing very positive cues over there. So I think that's the capital goods space for us. And apart from this, we have FMCG, which continues to be under a lot of pressure. As I already pointed out, the rural economy is still not showing any signs of relief. So FMCG continues to be under pressure. But I think apart from this, we have pharma. Pharma has been a kind of a defensive bet in the market. We have real estate, which has shown signs of some cool off in the activity. We have hotel stocks, which continue to do perform quite well. And in the PSU space, I think we have power, which continues to shine in trade. Now, as we have pointed out that in India, the current capacity, power capacity is 417 gigawatt. This is expected to reach 500 gigawatt by 2030. And out of the total capacity of 500 gigawatt, approximately 50% will be from the renewable sources of energy. So I think renewable sources of energy have got tremendous potential, whether it is solar power or whether it is wind power or hydroelectric power. So there's strong potential, and we've seen power generators continue to do very well, whether it is boiler, turbine generator, or companies which are involved in balance of plant equipment for the power sector. At the same time, we've seen transformer companies do quite well in trade. We have heavy duty transformers, we have distribution transformers, power transformers, and the resultant companies continue to do very well in trade. We have companies like TRIL, Transformers and Rectifiers India, GET&D, and the Bharat Bijli, etc., which continue to perform quite well in trade. So I think the overall power ecosystem continues to do very well, and I think yesterday we've had an important announcement relating to the semiconductor facility where we have CG Power and Industrial Solutions, which has been identified for the semiconductor project. Now they are going to do it in collaboration with a Japanese company, and I think what a turnaround story CG Power has been. This company had virtually gone into liquidation in 2020 when it was picked up by the Murugappa Group, The Murugappa Group made investments and in this company and revived this company, and today we have the stock price which has gone up from 20 rupees to more than 470 rupees. So it's been a kind of a dream run as far as CG Power and Industrial Solutions is concerned. Many more stories to cover, and but I think the time constraints will permit no further. We will be back next week with more views and more stock ideas. I think we'll wind up our session with this. Do write back to us with your feedback on our program. Thank you very much for a patient hearing. Thank you.